Hey, good evening, everyone. This is Mark from Right Line Trading. Thanks for attending. We have a huge turnout, much bigger than I anticipated, and just so happens at 6 p.m. the markets are open, and we're going to start to see price movement. And you can see from the counter in the low right hand corner. I'm sure there are a lot of people in the room who have the software. You can see this is counting contracts per minute right now, and this is on the E-mini. What I was doing is I was looking at, I was charting some of the longer term time frames to see what to anticipate for the market this upcoming week, and I left the E-mini up because the setup here on the E-mini is really fairly complex to make a determination as to how we're going to move out into the future. So I wanted to show you. Now sometimes when you see these webinars, some of the patterns that you see are stylized, and the easy ones are chosen. When I show you the NASDAQ, you'll see it's going to be really easy to interpret how price is going to move out probably next week. But the E-mini is not quite so easy. And you see here, you get this bull flag formation. Right here, you get a strong move up, and there's the flagpole of the bull flag. So always remember that when you have a bull flag pattern like this, you're always going to be anticipating a long trade or looking for a long trade until price breaks the base right here of the flagpole. So it's represented by a pivot, and you can see as long as we're in this bull flag pattern, we're always going to be looking for a long trade. Now, the price pattern within the bull flag is a little bit more complex. Now, when you get a pullback, it pulls back right to this 50, and this 50 is a real special 50. Now, I'm going to talk. It is not going to be that simple a lecture or a webinar, but I really want to acquaint you with the system and to show you how well that it really does predict price movement, and why, and how the optimization of software is such a great tool to use. Now, this 50 is a 15 exponential of, I'm sorry, it's a 50 exponential. It's a 50 EXP of a 50 EXP. Now, no one's ever done that before, to create an exponential of an exponential to create a moving average. But unlike price movement on time, tick, and range, price movement on uni-renko is exponential in nature. It doesn't move in a straight line. When you start getting this kind of movement, it moves incredibly fast. On the turns, it moves really slow. So you really need a fast moving average to keep up with price. And so we created this shorter term time frame, which is not important on these longer term charts. It's a 15 exponential of a 15 exponential. So price comes down to the 50 and it bounces, and you get this confirmation triangle. Now, it's not a very big one because we would have to retool the charts for you if you wanted to trade these longer term patterns. This is set internally for the shorter term time frames. That's why background bias is changing so quickly in color, and our correlative markets are. So we're just going to use price. But you can see we do get an entry long and a confirmation long. And then we move right up to the top of the flagpole where price bounces right down to support. Get the confirmation arrow long. Price goes right back up to resistance, down to support. We get the confirmation long. We go back up. We come down. We get the confirmation long. Here we break support. So we're in no man's land here. And when this price rolls over, there's absolutely no way we can trade it. When this price rolls over, there's no way we can trade it, because all we're still looking for is a move north or a move up, because we're still above the base of that bull flag pennant. So what we do is we hit support here and create a pivot. And price moves up. Now it then starts to move into a channel. Now, what you look for in a channel, and you do have a move here, and remember you're only looking to trade long, is a breakout here, a retest to the top of the channel, and then a move up. I mean, that's trading a breakout when you're looking for a bullish move in an overall bull market. So you do get a little bit of a move up here. This isn't a huge move, but it's a real reliable one, because you break, test, and then run. Here you get no breakout, really no confirmed breakout. Here, you go to the bottom of the channel, come right back up again, and here you have a breakdown out of the channel. Now you really can't take a trade short as long as you're still above the pole of this long move up. So now a breakout of consolidation almost always occurs in the direction of the overall trend. Now our overall trend is long, and will stay long until we break out from the bottom of this channel here, retest it long, and then we go short. So what we're doing here is we are in no place to trade. What we're creating here now is another area of consolidation between this upper channel and potential lower channel. And we can't trade within this channel. If we do, it's very dangerous, and you can trade off support up to resistance if you have a confirmed long. And then if you get a bounce back to support, you can go back up again because the channel's fairly wide. But the best trade that you're going to get out of this area is a breakdown again through support, a retest now of resistance, and then a continuation short to create a bear flag pattern. So there has been a continued move down, but the only thing we've been looking for now, remember the E-mini has been much more, has had great relative strength relative to the NASDAQ. So you'd think throughout this move, there were great short trades, but there really were no short trades. Now, this is a fairly long time frame. We're looking at about 5 or 6 or 7 days of data. If you want to go back a month or 2 months, then you're looking at the kind of swing trade that you're going to stay in for a real long time. Now, this is the kind of swing trade you're going to be in for 24 to 36 hours. And that's just the time frame that I chose, but you can look at any time frame you like. And if you choose to swing trade, we will give you the inputs and reset all of the internal indicators so that background bias, our correlative markets, and everything else will then start to reflect. This is not really reflecting the appropriate long short call here. All I'm doing is basing this assessment off a price. So you'll see how we do this week. We have a channel base that's at about 27.40, a channel high at about 27.62. So that's about 22 points. We really don't have a long trade here, because if we break above the resistance at 27.62, if price goes like this, breaks resistance, tests resistance, and then moves up right here, we've got a fairly short swing trade from 62 to 78, which is not bad. I mean, that's 16 points. You exit right here. Now, some traders will hold, hoping for a breakout that just continues. Others will just drop the trade right here, anticipate a pullback to the top of the channel, and then a long trade. But our overall trend is, as I said, remains bullish on the NQ. Now, what I'm going to do is I'm going to reset the E-mini, and we're going to look at the trade setups this week, which are really quite good. Let me see here for EAT. Actually, what I'm going to do is I'm going to just reload the E-mini template. Let me just move this out. It's 4, 2, 8. Now, the one thing that's really important also in terms of optimization is that each instrument, which behaves like a closed system and can be defined by certain forces that determine the future movement of price, has to be individually optimized, including the inputs on a uni-renko chart. Now, there's a huge amount of headwind. I've been trading for 15 years. Over the past 4 to 5 years, actually a little bit less, over the past 4 years or so, 36 months, trading has just become tougher and tougher and tougher. It has not become easier. It's become much, much more difficult. The markets are choppier. There's much more institutional volume. There's even some small commercial traders that can pop the market 2 or 3 candles against you. You really have a tremendous amount of headwind. And if you want to trade profitably, consistently, now we had 9 or more, I can't remember how many, we had a huge number of profitable sessions in a row. And then this week, and it's normally the issue, normally if we have a couple of bad days, it's my fault. But we just have to trade extremely. We had a couple of difficult sessions this week after Monday, Tuesday, and Wednesday just being really easy. Now, let me show you what we define here. I'm going to just quickly go over everything that you see. I want you to understand a little bit, and I know that there's some traders in the room that don't know exactly what they're looking at. I don't want them to be confused, but I'm not going to go over it in that. I'll go over it in some depth, but let me just make sure I've got the right setting in there. It's 428, which is correct, and I've got the E-mini template in. Now, what we've created here is really a small neural net, because the E-mini is just one market in a worldwide network of markets in which you can't decide moves in isolation. If you think it does, then you're really mistaken. And if you look at market movement that way, it's never, and remember, everything I tell you is my own personal opinion. Let me reload the template. It's my own personal opinion. But I believe that you have to look at a whole basket of markets in order to determine the best time to take a trade on the instrument that you're trading, because they're all interlinked. Now, I know you've heard of what's called a neural net before. And there is software that that gives you swing trades via a neural net. But what we've created is really a bit of a neural net, and I'm going to show you exactly how it works. It's very easy to interpret. Let me give the chart a second to load. It may just show the same thing as before, and then I want to also give you one caveat about what you're looking at, and I can tell you that while the chart's reloading. All of the indicators that you're looking at do a multi-time frame assessment. Anytime you do a multi-time frame assessment, now every time I say this, NinjaTrader gets mad at me. And it may not be NinjaTrader, it may be our indicators, although we argue back and forth. But nothing in our system ever repaints. I mean, I don't know why you would repaint an entry. It's just silly. But when you close the system and reopen it, it isn't going to look identical. And the reason that it doesn't is for this reason. When the market is live and you're on the right edge, and we can go to the right edge right now because we're in actually a live market. Now, what's happening on this live market is that this forming candle, and the market's moving really slow right now. Now, I'll show you right now how we have to reload the chart because of the fractal basis of the background bias. This doesn't happen when we trade live, but unfortunately it does when you do a look back. You just have to trade off the right edge. It's not, do a look back off the right edge, but you'll see what I mean. The chart will load in a second. Now, this is going to happen with any indicator that does a multi-time frame analysis. In truth, a lot of indicators say they do and don't, but if they really do, they're not going to look exactly the same when you close the market and then reopen them. So here we go. Now, right now, what the platform is doing, the actual inside of the platform, is looking at this candle and comparing it with the previous candle. And you see the halo is yellow, and that tells you that our multi-time frame assessment of order flow, stochastic, and momentum is telling us we can only trade short. But what happens when you close and reopen is that the system then compares this candle to the future candle. So it pushes the analysis a candle or two to the right. And if you want to do a look back after you close, what you have to do is you just have to make an assumption that everything's going to be a candle or two over. That's just the way it is. Now, if we look at the market this week, that's going to be true for almost every single assessment that we have. Now, we're going to start defining what I'm going to call money zones. And these money zones are really, really profitable areas to trade. Now, the most important, a platform or software can only do one thing for you. It can only define risk. Our software, does give us entries, and these entries are excellent entries for the most part, but you still have to vet them. Now, we're going to have our auto trader out very, very shortly. And so this X is going to wind up giving us a perfect entry. Still doesn't quite yet, but it's awfully good. Now, here's the thing. This gold line is the volume weighted average price. These are pivots. This is the session open. This is the session close. And here's another pivot. Now, I just want to tell you something really quickly about pivots. And for those of you in the trading room, we have 165 people in the training room. For those of you in there, it's going to be a little bit redundant, but I want to make like a lot of you may have seen the platform a long time ago and are not familiar with it anymore or brand new. Most pivot indicators create their assessment wrong. They create this pivot would be created off the candle wick low. That candle wick is not where the pivot should be based on Japanese candlestick dogma. The pivot is created at the candle body base. This is a lazy way to code an indicator. Just take the price low and stick a line here. But where all the hidden buyers are really at the base of the candle. And look what happens, and I just chose this at random. When price comes up and comes back down, it bounces right at the pivot and that's the candle body base, because that's really where the buyers are, and they just shoot the market right back up. So the pivots are very, very powerful, and they're very dangerous to trade into. And what we do in the trading room is we're going to trade off probably the third hit of a pivot, because every time the pivot gets hit, it gets weaker. The number of buyers here to turn the market get fewer and fewer, and eventually the pivot's going to break. Now, if you trade with a lot of specificity and you don't want to accumulate risk, sometimes the pivot breaks on the first hit. But so many of these pivots bounce on the first hit. And you see how this bounced on the second hit? It came right back up. It bounced on the third hit and came right back up. And then the fourth hit is what brought it through to the next area of support, which is the session open, where it bounced and then went through. And then you have your perfect trade. You have your pullback to resistance and the continuation short, and that's your great trade. And here's your next trade, down off of resistance again. But anyway, let's take a look at what I call the money zone. Now, let me just quickly define. This background bias is the multi-time frame alignment of the E-mini. Now, I'm telling you, you only want to trade. Now, there are 3 strengths of down bias and 3 strengths of up bias. This is the strongest. This is the weakest, this light pink. And the second weakest, well, actually the second strongest is this bisque color. The most powerful is this dark pink. And I consider this to be like a money zone. Now, in order for you to get a valid short in which the risk is exceedingly low, the 15, which is a very fast moving average, it's a 15 exponential of 15 exponential, must cross the 50 to the downside. Once you get that, you have the go ahead to take a trade that's going to be a low risk, high reward trade. Now, let me go and find a really, really nice entry. And there were quite a few on the E-mini this week. And the E-minis had terrible, terrible volatility. Here's one right here. Now, you simply have to wait. If you don't have the patience to wait, you're going to wind up accumulating plenty of losers. And one of the worst problems that we see in day trading is people who overtrade. Now, what these dots represent, this is just a small neural net. Now, the day of the simple platform is over. If you want to trade stochastic and MACD at the bottom of your chart, just looking at price, you're going to have no ability to determine where the future movement of price. And we don't care about any indicator that's lagging. The only thing that should clutter our chart are indicators that are leading. They're going to tell us where the market's going to go. We don't care where it's been. So what these 2 dots represent, this on a fast moving average or a slower time frame, so it's faster, and this on a longer time frame, is something really important on the E-mini. It's the direction of the RTY and the NQ. Now, it's awfully good to take a trade on the E-mini long when the Russell and the NASDAQ are heading long. Now, the correlation coefficient here is very high. It doesn't mean you're always going to get this to align. Sometimes the E-mini will move up independently. But if you look at these two markets, or these three, the RTY, the NQ, and the E-mini, there's so many overlapping stocks that they correlate in direction really tightly. I mean, the E-mini and the NASDAQ move in tandem really, really tightly. The same thing with the Russell. So these dots are simply giving us an assessment of the multi-time frame direction of the Russell and the NQ. And what's going on here is we're looking at 9 markets on these 5 lines. Now, the assessment's made a little bit different than the dots. And I'm not going to go into the internal assessment of how they're made. But here's your key line. And this is the key line on every single chart. And this is the line that tells you the direction of this. Now, you'll notice we don't look at fibs, and we don't look at some things that a lot of platforms do, because those do not predict the future movement of price. It's not preordained by some 400-year-old mathematician who created, Fibonacci transformations, which are really quite amazing, and they do have a lot of symmetry, and we do use them internally. But they do not predict the future movement of price. They can't. What that line is looking at is the RTY, the NQ, and the YM. And what this line is looking at, 2 of the 3 markets in here, actually there are 2 markets in here. This is looking at the direction of ZB bonds and ZN treasury notes. Now, the way the system is formatted, when stocks go up, the Russell, NQ, and YM go up. When stocks go up, ZB and ZN go down. So when ZB and ZN go down, this line's going to be green. So what we're looking at simply is the transfer of money from asset class to asset class throughout the course of the day. That's why the markets move up and down. Remember that in the course of a single day, the big institutions don't take money and put it to cash. They're just moving it from asset class to asset class. When risk is on, they're going to put their money into stocks. When risk is off, they're going to pull it out of stocks, put them into bonds and notes, precious metals and certain currencies. All we're doing is tracking that movement of money from asset class to asset class, and that is the key. What we're looking to do is not get into every winner, because if we try, we're going to pull in a lot of losers. What we're looking to do is to get into a winner that's going to have a predictive value of becoming successful at least 80 to 85% of the time. And you can see right here, we got just what we want. Background bias is green. So we know that there's a multi-time frame alignment of the E-mini long. And that is the most important independent variable. Now there's a math formula that tells us that there's a non-linear relationship between independent variables. Every independent variable on this chart is not equal. And that's why we trade on a discretionary basis, because we have to decide if we can trade without one independent variable. The auto trader that we're creating will never trade without all the independent variables being present. It doesn't have any discretion. But we do have discretion, and if we're careful, it allows us to trade better than an auto. And if we're not careful, it will allow us to trade a lot worse than an auto. Now, right here is we look for a pullback and continuation. But what we do is we need the continuation confirmed. Now, price comes almost back to the support. We call this our modified fast moving average. Instead of saying it's a 15 of a 15. And what we do is we look to see if we have dot confirmation. So we're moving in the direction of the Russell and the NQ. We're looking to see if we're moving in the direction of our 9 correlative markets, with this line being our key right here. And then we're looking for a system generated entry. Here's the revolutions entry, and here's our continuation entry. Now, this is looking at 80% of everything else on the chart before you get an entry. When we're done, which is going to be in about a week, it's going to look at 100%. And then it's going to become a true auto trader entry. It isn't quite yet, but that's our goal. Now, this is a unique indicator because it does a multi-time frame assessment. Remember, any indicator that gives you an entry off your charts, we have one that actually has a lot of validity, but in general, they're usually pretty invalid and they don't work. But I'm going to show you the inside of this indicator. Now, the difference between a range and uni-renko is not much. Each of them, a new candle forms when price moves a certain fixed defined amount. That amount, it has nothing to do with time. So if you're trading a 3-minute, it doesn't get cut off when that 3 minutes is up. If you're trading a tick chart and it's a 377 tick, it doesn't get cut off when those 377 ticks are hit. So it's independent of all that. And what we look at is we look at a range chart, and we look at 3 different settings inside. The longer term time frame is a 13 range. We look at an 8 range, and we look at a 5 range, and we project those results onto a uni-renko chart. And they're just really stellar entries to give you, because it's a range alignment on a uni-renko chart. And here's your long trade right here. And if we scale it right here, and this is it about 12:30 in the afternoon, you get 4.5 points. Now, that's all we're looking for. Now, you can't take a trade here where price is 5 miles off support. You have to trade off support. And here again, you don't have the quants, and you're trading into a pivot. So you have to give up the trade, and here's your trade right here. There's your continuation signal. You have order flow, stochastic, and momentum with you, candles outlined. You have your dual dots right here. The wick is not far off the 15 or the modified 15. This is going, you're going to have this in real time. And what you've got yourself, you can take the trade off at the pivot, or you can let this trade just go through. It's really up to you. There's no right or wrong about it. What I would do right here is I would make sure my stop is at break even. So if the trade comes back and bounces, you're not going to lose any money. The risk, it's really a matter of, your perception of risk. Now, there's one thing I want to do that I want to change on here is there's an overbought, oversold signal on here that should be removed. And I don't know why it's not, because we don't use it. And it's on our oscillator. And I'm just going to take it out really, really quickly. Here's overbought, oversold. That goes to false. That goes to false. I'm just going to take the chart and just reframe it. So those are two perfect entries, and we're going to go look again. Remember, we're only going to trade in our money zones. Now we're going to get winning trades in areas where the probability of a winning trade is low, but we're not going to take them. And we're just going to sit on our hands. Let's assume that we're trading with 25 contracts or 100 contracts, and our goal is to make $1,000 or $2,000 a day. I mean, have that mindset so that the thing that you want to avoid, almost like the plague, is the potential for getting a loser. So I'm just going to save this template as the new E-mini, where I've changed the setting a little bit. Now we're going to continue to look. Again, this is way off our support. It's a mile up. Now here, I know you may think I'm making it up, but I'm not. You're going to have this candle outlined in blue when you're trading live. You do have your key quant here. This is the direction of the Dow, the NASDAQ, and the Russell. That's the line you must have. If you have the other lines, you're in better shape. But this is what you need to take a trade. Now, if this was really black in real time, we wouldn't have it. The other thing you would need is these dual dot, is at least one dot to confirm the entry. If we've got it, that's a long trade. So we're going to have to make some assumptions. Here's a short trade, but you've got the pivot. And I'll tell you, we don't trade into the pivots. We're looking for an entry like that. But this doesn't come with background color. Now I'll show you later how to get it, how we handle those trades. Now, if you wanted to see a system where you're going to get 1,000 low risk entries, it's not going to happen. The volatility on the E-mini has been really lousy. Now, here's your perfect entry, right here. The problem is you don't have the dots right here, and you want a dual dot confirmation. And I'm surprised that we're getting them so infrequently, but that's just the way it is right now. Now, here's your entry right here. Got your continuation. This is such a low risk entry. You simply have to wait for these. If you're patient, you're going to get them. Now, here's a short trade, and this is not, now it's going to make it for us. It's going to, our first target on the E-mini is only 4 ticks. Our second target is 7, and our third target is 15. And that makes a point. So it's not a very big trade, but it's a winner. And I'm going to keep going just for a little bit more because I want to show you a lot of different markets. The point is, you're not looking for a lot of trades. What you're looking for are a lot of winners. And that has to be your mantra. And here's the kind of trade where I'm telling you, you just back up the truck. You've got another dual dot confirmation, a dual confirmation here. You've got the revolutions, which I repeat, will soon be an order trader entry. It's close, but not yet. There's that multi-time frame range assessment. Here the candles outlined in blue. You have a multi-time frame assessment of order flow, stochastic, and momentum, dual dot confirmation, and here's your winner. I mean, this is all you need to, now that's early in the morning Eastern time. This is all you need to finish your day. Now it's 12.25 points. I'm just scaling it from entry to maximum excursion. I'm not saying you're going to get 12 points on the trade. It's based on your automated trade management strategy. And while it occurs to me, I want to mention it. your ATM, I'm telling you, I think it's 25% of trading. And it's something that nobody deals with because it adds a layer of complexity that very, very few companies like Rightline want to deal with. We deal with it, and let me tell you, it makes, it provides us with a lot more. We have a lot more responsibility to you because what we need to do is provide to you the best way to manage a trade based on the average true range of the instrument, which is the volatility of the instrument. What is your best stop? What's your best first target? What's your best second target? And if you trade 3 contracts, and a lot of people do on the E-mini, what's your best third target? Now, if you don't set these right, you're not going to be able to milk the trade for as much money as you can. And you're not going to be able to minimize your losses on a trade that doesn't go in your direction. So, I mean, I'm showing you the trade entries this week. This is your perfect trade entry. Now, it occurs early in the morning. You may not get up at 7 o'clock in the morning to trade the E-mini. But I not only want to show you the entries, I want to show you what you're looking for on the entry. Now, the other thing that does add power to it is this is the volume weighted average price, or the VWAP. You always want to trade long above the VWAP and short below the VWAP. So the fact that the VWAP is down here and you're trading above it even gives this trade more power. So this is, honestly, this is one of those trades where the likelihood of a failure is exceedingly low. Every market here, Treasury bonds and notes are falling, the E-mini, the Russell, and the NASDAQ are rising. The multi-time frame direction of the E-mini is up. Everything is telling you where trend, you're trading not only with the trend, and the trend is definitely your friend, but you're trading with money. That's the key. We want to track the direction of institutional money, and it is being plowed into stocks, pulled out of notes and bonds, out of currencies, and out of precious metals. And that's defined by these 4 lines. So what we do is we constantly reassess this. And our first target on the E-mini is very, very modest. It's 4 ticks, or 1 point. Our second target is 7 ticks. And our third target is 15 ticks. Now, obviously, on that trade that went 12.25 points, you'd be long since out. But based on the average true range, if you set a target longer than this, you're never going to hit it, or very, very rarely hit it. I mean, we could set this at 60 ticks. Everyone's always saying, I want a 2-to-1 risk to reward, a 3-to-1. It's not what you want. It's what the market's going to give you. So based on 6 months of market replay data and our assessment of the average true range of the instrument, those are your best first, second, and third targets. You're not going to get better. And your stop here on the E-mini is going to be 11 ticks. If you go more, you're assessing too much risk. And if you go less, it's very easy to be just taken out by the natural movement of this instrument. Get hit, and then the market's just going to fly. So that's the optimal amount of risk and the optimal way to monetize. Now, if you look, on 3 contracts, you're risking 33 ticks. On 3 contracts on a full winner, you're getting 22, 23, 4, 5, 20, 26 ticks. So the potential reward here is a little bit less than your potential risk, but we're as close to 1-to-1 as the market will allow. That's all we can do. We can't do better. Now, if we continue to move, we've got to wait for a short on the dark pink, and here we go. Look at this trade right here. Now, this is late in the afternoon, but it doesn't matter when it comes. I want to show you the trade and the setup, and look at the trade. These are your low risk, high reward trades. And you've got 3 lines. The key line here is that's the metric. Dow, NASDAQ, and Russell. Here's a different assessment of the Russell and the NASDAQ. They're all there. You see how that you'll lose that slow assessment for a while. Dots disappear, then they come back. But this is just a perfect short. Again, order flow, stochastic, and momentum. You can take the trade off at the pivot or tighten your stop, however you want to do it. There's no wrong way here because no one will know if the pivot's going to break or hold. One way, of doing it is squeezing the market real quickly and seeing that this pivot was never hit. So the likelihood of this pivot on a statistical basis is that it's going to hold. So if you exited the trade at the pivot, you're correct. If you tighten your stop here at the pivot and it rolled through, you're correct. If it bounced off the pivot, it took a little bit of a loss. As long as you base your management on knowledge and understanding of what's likely to happen here, you're going to batten down the hatches here. But you're in, and long before it hits, you've really racked up real nice profit. And here's your next trade right here. Now you don't have pink, so I am not gonna count it. We're only gonna take the trades. Now this trade I'm not gonna account either because it's into a pivot 1 and a 2. It's too far off support. And I just want to show you trades that I wouldn't take in the trading room. Now, I don't care how many winners I get in a week, as long as almost every trade I take is a winner. I don't want 17 or 20 E-mini trades. I'll take 5 or 6 if I can get 5 or 6 winners. I'm trading more than one instrument, so it doesn't make any difference to me. And I never chase the market. I am only going to take, then here's another winner. It's right here. Now that's another great trade. Now you do have a problem here with the pivot, but here's a trade I would brave the pivot. This again is late in the afternoon, but I just want to show you order flow, stochastic, and momentum. The reason I would brave it is it's a fairly small pivot, and price is already into it. Now technically, a pivot only breaks when two-thirds of the candle body closes above it. That's what our indicator does. And like I said, with tracing out the pivot itself, tracing out the break of the pivot is done on a very lazy basis. Most assessments are done 1 tick above the pivot, it stops tracing. Our system didn't stop tracing until this candle because 2/3 of the candle body closed above it. That's a real technical break of a pivot based on the Japanese candlestick dogma. So you're going to take a trade into resistance. This is a very likely, this is worth the risk. If you take a loss here, you need an Advil or 2, but this is worth taking the risk here on this dual entry in that money zone with the revolutions. And this is a great signal for a long trade. And I'm only giving you the most really, I mean, I'm passing by some trades I might take, but I'm only giving you the cream of the crop here. And really, that's all you need to take. In fact, if you just trade the E-mini and you just wait for those entries, you're going to be very, very profitable. Now this was like, well, I'm not going to say it was likely here in this particular case because I can't be sure. And I'm just going to show you one more entry. Then we're going to move markets. I'm going to show you how my long-term prediction for the NQ. Here you can't take the trade. It's right into this big pivot. And see what happens? Boom. Right up it goes. So unless it's a tiny pivot and you're right into it, if you trade into these, I'm telling you, you're going to get beaten up. I tried to do it a couple of times last week, and it was really, really difficult. It's very frustrating too, because there'll be many times where the pivot will break on the first hit. Then you say, okay, it's breaking. You take the trade, and it bounces right off the pivot. Now, this is a little bit of a tough continuation long because it's too far off support, and I don't like it. Now, here's your long trade. It's a little risky, I have to tell you. Let's take a look and see how many times that pivot was hit. Okay, it was only hit once. So this is risky here. You see, price came up to this pivot here and turned. And it turns right back down. This tiny swing pivot here probably hadn't even been traced out by the software yet. So you're dealing with a second hit of this pivot. Now the entry is here, one tick above the close. By the time you hit the pivot, you're at 1.5. So you've got room, but also you have to remember that a pivot's not just a line, it's an area. So you're going to start running into sellers any place in here. But at 1.5, when you're looking for a point, I think you're okay. You have your key line here. You'd like to have more, but this is that discretionary component of trading. You know, you don't have bonds and notes, but you don't have anything against you. And you know that the NASDAQ, Russell, and Dow are moving with you on this trade. And you also don't have the dots. Now, that's the kind of trade I probably would not take. I want you to know that. I want a dot confirmation on these trades. So I'm going to just let it go. I mean, I don't want to show you winners that I wouldn't take in trading. Now, look at that trade. Now, the 15 and the 50 are right on top of each other, and that is A-OK. There's your continuation signal. This dot would not be green in real time. I guarantee it. It would be red. Remember, this is a multi-time frame assessment. It's a fractal assessment. These colors get all screwed up when you close and open. You've got your key quant, we call it. You've got your lower quant, icing on the cake. You probably have this quant as well. You've got order flow, stochastic, and momentum, and you've got a perfect short. Down you go. So I think you see, if you trade with a lot of specificity, which is not worrying about how many winners you get in a day, it's not chasing an entry, it's waiting till every single signal that you want aligns, you're going to get an enormous number of winners. Now, I swear I did not see a loser. If I did, I would be right out. Here's another winner right here. Perfect short. Now you're a little bit far off resistance here, but with these dual signals and dual dots, and here you have all four quants, 9 correlative markets, down you go. Now we haven't seen one of those signals fail. Now here's a failure. So there's our first loser right here. That's a continuation short that fails. I don't want, and I think it's good to see that, because I don't even want you to even have the notion or think that every trade you get is going to be a winner, because it's just not. But if 8 to 9 out of 10 entries are winners, you're rocking, and you don't need it. Now, when this background bias is clear, you are not going to go near this market, because the higher time frames have no alignment. And oftentimes when that occurs, the correlative markets have no alignment. because the institutional traders are not pouring money into anything. And I don't want to get esoteric, but a closed system in which no energy is applied, as a law of thermodynamics chops. This is a closed system. It's like it's like your son or daughter's bedroom. Just by nature, it tends to get messier and messier and messier. And until you go in there and clean it up or yell at them to clean it up, it's going to continue to get messier. When you go in and clean it up, what do? You apply energy. It takes work. Well, until the institutional traders come in and apply money, the market by its very nature is going to chop. And if you try to take a trade without that background color, the likelihood of a winner of a loser is exceedingly high. And no signal can override this. This is really a disaster. That's why this is and here's a great trade. Now this I can say with confidence is going to give you a 3-line long. This is going to be colored in blue. And that's your nice trade long. They don't all have to be home runs. I mean, I'll take this trade any day for a long. This one goes 12 ticks. It goes through your first target of 4, your second target is 7, doesn't go 15, but your stop is trailing the trade. It's going to come back and take you out, and you've made nice money on the trade. So I'll take it. And here's another one. Now, you can take it here. Look at this trade. Now, you don't have green here. You miss it by a tick. And you can see, even though this, I just want you to see, is what validates that the assessment is not being made off a price on your trading chart. Price continues to rise, but we lose that background color. The NASDAQ and the Russell retrace along with the E-mini. So we're trading this color. It's a little weaker. Here's your entry right here. Now, I think you're going to have the 3-line here. The problem is you're trading into the VWAP, and that's very dangerous. So I wouldn't have taken that trade. I don't want to take any risk on the trade. So we'll look for one more. You know what? Let's go to the NQ. So let me close this up, and I'll show you any market that you like. And actually, this was the NQ. So we'll take a long-term assessment of it, and then I'll show you the short-term. So let me just put the NQ in here, and I'll show you any instrument you want. I don't have the stock data feed or the Forex data feed hooked up, but you're going to get the same identical signals on Forex and stocks. If the forces that you use to trade the market are not independent of price or the trading instrument, then they really don't work. If you hear any piece of software, anybody say to you, okay, this only works on a 450 tick of the NASDAQ, or this only works on this speed of the E-mini, then it's just not, it's useless. It's got to work on any time frame, and it's got to work on every single financial instrument, or it just is just, it's just, I mean, I hate to say it, but it's garbage. And that's a good heads up. And I also want to say another thing that you're never going to hear this anyplace else about Japanese candlestick formations. In trading range bars, I love Japanese candlestick formations. But let me tell you, and you're not going to hear this from the Japanese candlestick guys, but here's the truth about Japanese candlesticks. Back 400 years ago, when Japanese candlesticks were created, the Japanese rice traders made an assumption. And at the time that they made that assumption, this chart looks like it's deader than a doornail here. It's still moving. They made an assumption, and the assumption was that the power of every buyer was approximately equal to the power of every seller. Therefore, if you had 25 short traders and 25 long traders, they were pushing against each other with equal force. Therefore, Japanese candlestick patterns created a really powerful assessment of market sentiment. Now they still do, they're still useful, but because that's no longer true, the power of Japanese candlestick formations has really, really lessened, because the institutional traders just make mincemeat out of them, number one. And number two, we now have a global market that's linked globally. So if there's a change in any financial instrument across the board, if something happens that moves the price of the euro, or something happens that changes the price of a precious metal, it's going to in some way affect the price of your trading instrument. Back then, there was no global market or global neural network. Also, there's some commercial traders who trade big lots, and they can knock you out of a NASDAQ trade like a ping pong ball. So although Japanese candlesticks, and I'm going to show you, I'll show you one pattern that I look for that's really powerful, they have really, really lost a lot of their authority. Now they're good for swing trading because the longer term time frames give you a little more useful information. But again, they're not like they used to be, let me tell you. I mean, when I learned them 15 years ago, they were really good. And now they're really, I may have to make a new chart here. I don't want to hold up here on this chart for some reason, just maybe blown. I don't know why. I think it's because I didn't change the time frame, and there's so many candles on the NQ versus the E-mini. It may take a week for it to assess. So I'm just going to click it out. Uh-oh. I have it away because it's going to drop my Ninja Trader. Oh, man. Now, my Ninja Trader will reboot in a second. Let me give it one more minute to respond. It's still calculating. If not, I'm just going to reboot the system, because there's a couple other things I can talk to you about while it's coming back up. And since the market's moving with small volume, it won't take a long time to reboot. All right, I'm just going to close this. And let me reboot it real quickly here. Now, what I'm going to do is I'm going to show you the long-term assessment of the NQ. I'm going to show you the long-term assessment of crude oil. Now, what makes the system more complex also and more difficult is that every single market has you. In other words, the quant assessment, or the 5 lines or 4 lines that are below the chart, are all different for every single market. So the setup is much more complex. In other words, you can't take you can't take our fast and slow dots above the candles and put them on every market. We have E-mini dots, we have NASDAQ dots, we have crude dots, we have specific Forex dots. So it's much more complex a deal. So we're active on NinjaTrader 8, and I'm not going to talk to you about our trade execution platform, but we're going to be up. And I want to show you. I mean, I haven't looked at the NASDAQ, but let's take a look and see what our predictions. Now we know the E-mini is not if you're not in a trade on the E-mini, if you're in a trade on the E-mini, you should be out, because the E-mini broke support of that channel, that lower channel base, and is now basically potentially in free fall in a bull market. It hasn't broken the bottom of that bull flag. So you should not be in any E-mini trade on any swing term, on any swing basis. It really hasn't bottomed out. So, I mean, that's the technical formation today. I mean, tomorrow, maybe housing will come in, some factor will come in. Maybe Trump will clear up this trade war with China. And what I've read is that the Dow is good for 2,000 points if there's any announcement that war, or that tariff war, is going to end. So we have to be very, very careful about swing trading, because we're in such a volatile time right now. Um, I don't like to hold futures overnight. Now we've got a futures swing trader named Keith Wade, and he is just unbelievable with his picks. He just made 200 pips on one of his forex calls. He trades seasonal patterns. It's different from what I do, but he's amazing. All right, the chart should be coming up any second. They're loading here. I'm sorry about this inconvenience, but when I change instruments and change time frames, sometimes it hits. I'm not going to do that again. Now I have two data feeds. I have CQG and Kinetic. I have one backing up the other, so I don't have to worry about one of them collapsing and falling. Okay, here we go. Here comes the market right up. Okay, so let's take a look at the NQ. Now, we're going to look at the NQ on a much longer time frame, or a 10-4-20. We're going to go to a 40, a 16, and an 80 uni-renko setting. And we're going to go from 3 days of data to 10 days of data. This is a big candles, so it happens pretty quick. We're going to move the chart out, and what we're going to do is we're then going to squeeze it like this. Now, at first glance, it may not be very obvious what the NQ is going to do, but I think if you look at what happened before, you can see fairly clearly. You can get a much clearer idea. First of all, here is, again, your bull flag pattern. There's your bull. Whoops, it's the wrong indicator. Let me get rid of it. Here's your bull flag pattern. And you can see it traces out a pivot, so you know where you are. Here's the top of the flag right here. Also traced out by a pivot right here. Now, here's your slower moving average. And what you have here is a period of consolidation right here. Not very good at drawing, but the market is just bouncing here and you have no trades. Now you're looking for consolidation to break to the upside, and it doesn't. It breaks to the downside, but you're still in a bull flag formation. Here you go back into consolidation, and here's a really good trade. You break, retest, see the entry right here? There's the signal, and up you go. Now this is a big trade. This is a gigantic uni-renko candle, and I'll just give you an estimate of the size of this trade. It's 106 NASDAQ points. That's over 400 ticks. And it's a very valid trade because you're bouncing off support. Here's your consolidative pattern. I want to make this clear. It's right here and it's right here where you're in consolidation. You come to up, down, you break out here, you test here, and up you go. That's the kind of trade, if you want a swing trade, you look for. Now, then you come back into the channel right here. And here you go right back in, up, down, up. It's a narrow channel. You can't trade inside it. You're looking for the same thing to happen again, a breakout to the upside. But here's what's happening. You're breaking out to the downside. And you can't take a short trade until you break the base of the bull flag pattern. So with the NQ, again, We're sort of in no man's land here. We just don't have a signal to trade. And that's just based upon price action and market structure. That's all. You had one break of a period of consolidation right here, a retest of it. We don't chase the breakout. We wait for it to retest support and then give us some valid way of knowing that this retest of support is going to hold and price is going to move up. That's a tremendous swing trade. Now, let me reset the chart. And we'll look at the day trades. And this is a 10. It's different than the E-mini, a 4 and a 20. And we're only going to load 3 days. Now, if you take conservative trades on the NQ, they're unbelievable. But the NQ is a monster to trade. I mean, it's ugly and it's vicious. And it will kill you if you extend your risk out at all. And after this, I just may go to questions. Because I want you to, have time with your families tonight. It's Sunday night. You see, I do, as I move through, I want to point out, there's a perfect signal. Right into support, right into the pivot. And look what happens. Boing, up it goes. Don't trade into pivots. What happens was it swings right around and the second hit, it goes through. But the best thing to do for you is to avoid them both. Don't take the loser and give up the winner. That's how you trade profitably. Because you can't guess. A second hit is only slightly less likely to bounce than a first. Go for the third hit. And the ones I call them free and clear are the ones that just pound away and making money. And there's your entry right here. Now, again, just like in every other market, this is our key. These are all the other index equities. This is the E-mini, the Russell, and the Dow. The dots now are the E-mini and the Russell. These are very powerful dots. There's your entry on that continuation, that multi-time frame alignment on 3 time frames of the NQ on a range chart. Here's your multi-time frame alignment on the NQ, order flow, stochastic, and momentum, and there's your trade. Killer trade. Now, even if you had to wait till 1358, and I'm not saying that you had to, but let's say you had to sit on your hands until all this time. You have tremendous patience. You wind up with a 28-point NASDAQ trade. Now, our third target on the NASDAQ is 40 ticks. 40, 50, 67, that's 90 ticks you'd make on this trade on 3 contracts. That's about $400 in, give or take on one trade, as long as you exercise the kind of patience that you need. And I'm telling you, I am not bypassing losers. If I find one, I'm going to show it to you. Only we're so specific with the trades we take. Now, here's another winner right here. This one is a little bit, it's right into support, but the 15 is a little bit wide here. The space between the 50 and the 15 is a bit high. This breaks the pivot. 2/3 of the candles above it. You've got your key right here. That's the one you must have. And you have a really nice trade. I think you've got 30 ticks here because it's a 4 uni-renko. It's 4, 8, 12, 16, 20, 24, 28, 30. You've got 2 targets. You have a $300 trade here. That's a very, very low risk trade. Now here's a signal, and I think you're only going to get a first target here. You're only going to get 20 ticks. Just get 20, right on the nose. But we'll take them. And here's another, roll up the truck. There's your entry. You got to be careful here. This is yesterday's close, that dot dash, but you've got space. And here you have 2 targets. I know you have 30 ticks here. Here you can't take this trade because you don't have the right background. And here's another winner right here. Perfecto. Now, this might be 40 ticks. I'm not going to scale it. It's a really, really nice trade. And they just keep coming. Now, here's another trade. I don't know if this pink moved to the left enough to envelope the trade, but here's where you would take it, because here's the pivot. Price comes down, hits, and bounces. That's one hit. Price comes down, hits, and only gives you one up candle. Hits, gives you one up candle. Hits again, gives you one up candle. Here, you're taking that trade through. And that's a full winner. There's 40 ticks. Now you have no entry anyway, so it's real lucky. You keep hitting this pivot when you don't even think twice about whether or not that pivot is going to break or hold. You have no entry. Now this is an entry. Well, I'm not even going to talk about it. I mean, there's slight modifications, but I want to only show you the system generated really low risk trades. And I could go on like this for a long time, because here's another entry. Now, it doesn't come with the appropriate background. I'm just going to let it go. We don't have to reach for the trades. We only have to look at the low risk trades. I mean, to make this just, a stellar trading session. That's wrong background. And here it is, right here. It's early in the morning, but up you go. Now, only taking the most conservative of the most conservative. Here you don't have the quant. Here, there's definitely no quant here. So this trade is not valid. And there's no chance you've got a trade there. So I think you have an idea. Here you don't have the right background and you don't have the quant. It censors a ton of losers. And that's the key to day trading successfully, is you want the software to define risk. And without this line, you cannot trade the NASDAQ. You got to have it. Now here, you have it. The only problem is you're trading right up into dual resistance. And that's just a trade you just can't take, because you saw what happened before. You don't want to take a loser. So I could tell you we would take it, but I would avoid it. Of course, I would cry afterwards because I had to let it go. And I'm a good whiner too. But you have to let trades like that go. Now we're getting into a lot of chop. I'm not bypassing any losers, believe me. They just in here. And let me see if I can find one more winner for you. And now I'll move really quickly to crude, because I want to show you crude. Now here's well, it might be an entry. And I think this is going to get you 20. We'll check it out here. Nope, it's 17. So what you're going to do is wind up with a break even here. You're not going to take a loser. That's too bad. Doesn't have the right background. Okay, I think you get the idea. I don't want to bore you. I don't want to bore you with redundancy. The point of the matter is you wait for the market to come to you. Now you can trade as many markets as you can find or you can follow. I'll just show you one crude entry. Here's one. Here's your key. In fact, here's two. There's your key. And here's the other. Now that might be red, so I'm not going to count it, but I'll show you one other. No color, forget it. Don't even think about trading crude. Now, that's an entry, but I'm not going to go into the slightly more complex entries. See this blue background? It's only the up direction, but it's still not powerful enough. Now, this is going to be an entry. We're going to get that green one candle over. And I ain't making that up. In fact, this is a loser. We finally found one right here. This goes nowhere. So again, occasionally we're going to take a loser. That's going to be a valid entry. And even though this cyan may come over a candle, it's very likely on this entry we had green background with dual dots and a perfect entry. And here we're going to take a loser. So we found two losers on the chart, and we will take losers for sure. Okay. Now, I just want to let you know that what we're going to do very, very shortly, or in the process of making it, is we're going to make what's called a money zone alert. And it's going to look like this. Now, the criteria is going to have to be, you've got this dark pink background. The second criteria is going to be the 15 will have to cross the 50 to the downside. That's where you start looking for your juicy trades. You can't take a short trade if the 15's above the 50. And the best shorts come with that pink background, with the strongest down, the multi-time frame down on the NQ. And what we're going to do is, and I can show you where we are with it now. It's just a variation of it. Let me see if I can find it here. It's going to, so you can watch multiple instruments at the same time. Wait for it to fire and know that you're in the money zone on those instruments. Let me find it. Here it is. I'll show it to you on the NQ. Now it's not done, but it's right here. So here's the NQ. You see it's starting to assess color. And when that alert goes off, it means you're in your money zone. So if you're trading 4 or 5 instruments and you have no alert, there's no reason to even look at the instrument. Don't even bother with it. Just wait for the alert to appear. And if you get alerts on 2, you can bring up 2 charts. Until then, you just keep them folded right down here. And when you want to, it's really easy. Of course, I can't do it to bring them up. Hold on a second here. Here we go. Right there. If we want to bring up crude, we'll just go here. I get a little more facile with it. You can bring there's crude and so you can bring them right up. It's really easy to do. So there were tons of good trades, and let's do a quick assessment of how crude's going to trade. Now, crude we're going to take on a 20. 840. We're going to take a look. Now, if you want to swing trade, we have to give you a whole different platform. It cannot be swing traded on this platform. This is a day trading platform only. That's the problem with fractal analysis. So let's just recalibrate, which will happen pretty quickly. And we'll take a look at crude. Now, let me tell you, the long-term assessment here is pretty accurate, unless some really, let me just take off all the, what I do is after we trade in the morning, I usually do about an hour of teaching afterwards. So I mark up the charts. And So there's a lot of junk on the charts from all the teaching. So there we go. So let's squeeze it and take a quick look. Now it's crude without going too far back. Well, we really do have to go further back here. See, 10 days is not going to quite do it. But from what I see here, we're in this period of consolidation right here. I can't tell if we're looking for a long or a short. I'd have to go further back. All you can see is this. You've got the break, and that one candle gives you the retest and the continuation short all the way down. If you're swing trading, you're going to take the opportunity to take a big trade. That's really all I can see. So you would get this huge trade. Now, here's the consolidative pattern right here, and down here, you just have nothing to trade. I'd have to look back at a much bigger time frame, go back about 20 days to get a better handle on how to trade crude. But the crude trade out of this channel, back up and down, is a great trade. And that's an enormous trade. After that, I just don't see anything, because what I see here is potentially another pattern, but I don't know if we're coming out of a bull flag or a bear flag pattern, and I always want to establish that. And there's always one before we decide to take a trade out of consolidation. So that's a quick assessment of crude. So let me see if there are any questions. I hope you learn from this. I mean, I wanted to make this a learning session and not so much, buy. Hang on one second. Now, I will tell you that we are going to give you a special, and this is something that we've never done before. If you want to come into the trading, we've never offered this before in our 5 years. But if we've offered lots of specials on the room, but for $79, if you want to come in the room for the month, the first time we've ever done this, we'll also give you the software. So you get the software in the room for a $79 1-month trial. And if you decide to buy, we'll apply the $79 to your purchase. And if I don't make you money in that month, and then I will, one, throw myself off my chair and beat my brow, and two, we will make money. So that is the special. It's very little money, and we've never sent, because the configuration is a lot of work. And Sergio does all the technical support, everything. So for brand new traders, if you've never been in the room before, if you've come in before on trials, you can't take this one. But for $79, we'll let you do that. So let me just go in and answer any questions. Okay, we got them. Hang on a second here. Let me go to the top here. Okay, guys. Scott, this is applicable to any market. We trade, we have software, these are the markets that we have active right now, and this is just the futures markets. We have the Dow, we have the NASDAQ, the NQ, we have the E-mini, we have the RTY, we have the 6E, we have the 6J, we have the 6C, we have the 6B, can't type, we have gold, and I didn't show you the DAX. I'm telling you, the DAX is a killer, and we will soon be opening a DAX room that will start at 3 a.m. in the morning Eastern time. I'm trying to think, see if we have any other markets. Yes, we have bonds, ZB. We have treasury notes, ZN. So what we're looking for now, if you do come aboard and you buy the software, you always get the add-on markets for free. We're looking to do natural gas, and we're looking to do silver. So it takes a while for us to do every market. But what we're doing now, and we should have in 10 days, is an auto trader. It's going to be based on this entry. You're only going to get an entry when everything I showed you is present on the charts, and it's going to look at all these markets behind your back, and it's going to trade them automatically. So here's where we're active now. We're active on more markets than you can trade. So it's just not the markets I showed you. And we're always adding markets, and you'll always get those add-on markets. And when we come up with this new alert system, anytime we get an upgrade or an add-on, we always give it to you. We never charge. So that's just our philosophy. ATM is your automated trade management strategy. Remember, when you get into a trade, we trade with Chart Trader up. Now, I could show you a Chart Trader trade. It's going to screw me up for tomorrow. But let me just show you really quickly. And actually, I think it's worth, for 2 seconds, I'm going to show you something. Here's our trade management tool. And I'll show you how the room works really quickly. You're still in here. I think it's worth seeing. Here's our trade management tool. And we're going to take the NQ and we're going to connect it. Now, all we need to do to trade is, let's go to the right edge. And we're going to, I'm just going to take a trade. I'm just going to buy.
Order pending.
And there's the trade. Now you see
filled.
It's filled. Now you can see every trade we take has this up. Here's target 1, here's target 2, target 3 is off the chart, and here's the stop. Here's the profit loss on the trade in ticks, not in money. And we can change that, and I should change that. The chart trader properties. At the close of the trade, it changes to money. So it doesn't make any difference. It's going to tell you how much you've won or lost. And so I'm not going to bother with this. But so your trade management is what's up there right now. First target, second target, third target, and stop. That's your ATM. And that is real key. Where you take profit here, where you take profit here, where your stop is, where your entry is about 25% of your trade. So I'm just going to close it.
Target filled. Now,
without that tool, you have to use the dome. I lost 110 bucks. So I'm going to open tomorrow morning down 110 bucks. But if you have the dome, then it's a lot tougher. You have to take a buy stop or a sell stop. With this, all you have to do is just hit a button. Let's say you want to buy it up close.
Pending.
Order is pending right there. And it knows where the candle is going to close and automatically takes your entry 1 tick above. It's a real easy tool to manage.
Order canceled.
So we have a patent pending on this. It's been pending for 2 years. And we've sent in 2 revisions. That's the ATM, Edward. If you don't know what that is, you better learn, because that's really, really, really important part of trading. Now that's something we will set up for you. We'll give you our best ATM for every instrument that you trade. All you have to do is tell us, how many contracts do I want to trade? 1, 2, 3, 4, 5, and 6. We'll give you the recommended, our recommended trade management strategy automated for those contract numbers. Hey, thank you, Ford. I'm sorry, Dave. For contracts for each target, okay. No, it is, Bob. We changed the internal settings of this. That is not true. Okay. Okay, Ford, thank you. It's set for Eastern time, Edward. We're in Florida. So if you look at the levels indicator, you'll see that if I go to the indicators right here, and you go to the levels is the only one where you have to put in your session start date, time and end time. This is 9:30 Eastern and 16:15 Eastern. If you're in Central, it'll be 8:30 and 15:15. And if you're Pacific, it goes down. So we're Eastern Daylight. Yes, it is, Jonathan. We're working on it really hard to bring this to NTA. Sergio's very close to completing it. And what we're going to do it's going to be a week to a week and a half. This Revolutions entry is going to be the same one that the Auto Trader takes. So it's going to be a perfect entry every time. So when we send it out to you, we're actually sending you the visual Auto Trader trade that you're going to be able to take on a discretionary basis on your charts. The only thing that the Auto Trader will have over you is that it's going to be able to watch 8 markets at the same time. That's it. So we are doing it. Okay, Ford, I appreciate your comments. Take care, Ford. The green dotted lines, Fitzroy, this is the 15. That's the only green dotted I can see. And this is the exponential of the exponential. It's right here. It's called our modified fast. That's the green dotted. And it's a relatively new indicator. Now, I just want to show you what an optimized system does. If we look at this, for some reason, background bias has completely vanished. Let me reset that. You see, it's here now. Is that the 15 will climb? Well, here it's not doing it perfectly, but we can't get it every time. But we've optimized this so that about the time the 15 crosses the 50, you're going to start to look for the green. We want it to come in as soon as possible. We can't speed this line up any more than we have. If we do, it's really going to be a problem. We're going to lose our specificity. We're going to be trading with too much sensitivity. We don't want to do that. So that's what that dotted line is. Sure, Leon. Let's take a look at ZB. Now here's the 6J. I'm not going to look at that. I have to remember what the heck we're trading. I think it's 415 on and we're going to take out the 6J. No, I don't want to take that out. Let me just hit that. Let me go back to 3 days so the chart doesn't freeze. And let me move this to bonds. Now, bonds are really tough to trade. Here's ZB. Let me put the template in. And let me add more data. Let me put 15 days to load. Now, bonds is $31.25 a tick. When you take a bond trade, you really want to make sure you're not going to take a loser to the best of your ability. Now this is not, hold on one second here. Sorry. I'm just going to leave these settings right here. Now let's look. Now here's your perfect entry right here. Now, you don't have the quant, but that's a really, really good entry. You have this quant, but we're not looking at this in real time. You really want this one. And let's find a great trade, because there were some great trades in the last few weeks. I need more data because there's just no data on bonds. Let me go back 25 days. Okay, let's go back here. Now there's your entry right there. Now the problem with the entry is you're trading into these dual pivots. That's all. Dot color is just going to be off. So you really can't take the trade, which is a shame. Now here's your entry right here. Again, you're trading into pivots. You're stuck. Now here's a short trade, and it's a first target because it's a small trade. So you have nothing here, the 3 lines in the wrong direction. And you have a pivot problem there. There's your entry. Well, don't have that. It's not the dark pink. Here's your entry right here. That's a perfect entry. Right here, you see the continuation signal right there? Now you've got some support you got to break. It's right at session open. So that's a discretionary trade. Let me see if we can get one free and clear here. That's just perfect. That's really it. That's all there was. I mean, nothing is perfect as I would like, Leon, but some pretty good trades. Yes, there will be, Richie. Richie, what we do on TOS, because I have Thinkorswim, and I trade all my options on Thinkorswim, is Sergio will take your Thinkorswim data feed and connect it to a demo of NinjaTrader, and it will run it perfectly. So you're going to have to take the signals off of Ninja and trade it on TOS. It's a little more cumbersome, but the upside is it costs you nothing to run Ninja. You're on a demo of Ninja that's being run off of data from TOS. And TOS provides an awesome data feed. It'll run futures, it will run stocks. I won't run Forex, but it's great for both those markets. So we have a lot of people on Thinkorswim who just take the signals on their Thinkorswim platform. I think we got it. On the NQ, Robert, it's 10-4-20 is the NQ setting, and that's the same as the Dow. Sure, Steve. Steve wants to see gold, and I'll show it to him. Now, gold is an easy template to set up because it's the same as crude. I don't have to change the uni-renko setting. I'll show you short-term and long. Let me just dial in the instrument. And then I'll put in the template. I haven't looked at gold in a while, actually. I'm actually curious myself. Now when we get the alert system, we're going to add gold. I want to trade gold. I want to trade the 6E. And let's set it. Let's do our long-term setup, which is going to be a 20, an 8, and a 40. And let's set it for 25 days and take a look. Now, if you want to swing trade gold, you have to tell us, and we'll send you the background bias, the quants, the dots, all set for that longer term time frame. So let's give it a second to hit. Now I will send the recording out tomorrow morning. So if anybody wants to listen to any part of this, they're welcome to do that. I still have to give my son, I'm a single dad. I still have to give my son dinner. I think the poor kid's wasting away. Actually, I'm just kidding you. A kid eats like he's going out of style here. Okay. Now, here we are with gold. And gold has a really nicely defined pattern here. 10 minutes, babe. I know you're hungry. Here's your bull flag right here. Now you had an opportunity on a retracement here and a valid signal to go long, a retracement here, and a valid long, but this would have overrun you a bit. You'd have to have a really big stop here to catch this. Now, though, you're in 100% consolidation. Now, the bull flag pattern has been topped, and technically, we're in a breakout. And what we need is a clear-cut retracement and breakout to the long side, which we don't have yet. Or what we would like to see is a nice pullback right here. Now, as we pull back, we will hopefully create additional pivots where we can pull back to. But right now, we've got nothing. We can't go long unless we get a breakout. Now remember, let me just show you this. Here's a pivot because we created a new pivot high here. So unfortunately, what we have to do is actually set the channel here. So the breakout is going to have to come here. And then the retest here. And then the continuation long. There's no setup here for a gold swing trade. So we either have to break this high, and this high is right around 1234.5. Get a nice breakdown here. Establish a base, maybe in a channel. And then look for a breakout of the channel to the upside, pull back to the top, and continuation long. That's where we set up with gold. Now, we'll just look really quickly at I'll just do a day or two. Let's reset this back to 4. We'll just go back 4 days. So I don't want to overload the system here. We'll get a chart that takes 3 years to load. All right, that was quick. Let me just open it up. See what we got. Now, the only thing we could do is the only thing we can sell is on green. Now, this is a potential trade because it's a pullback right to support on this candle. Now, I don't know if this was surrounded in blue, and it may or may not be. I can't be sure you have a trade, but you have a trade right here. See the wick back? You're pushed through the pivot and you're up, but you have this pivot. So that's a tough trade. Nothing free and clear here. Now here's your trade right here. Now the dots are all, trust me, are all wrong in color because of the reassessment. Right here, that's even a perfect trade right there. And here is your gorgeous trade. Now the problem is this pivot, but we know it's been hit at least once. I'm not going to go back to see if it was hit twice. It's right here. It's a one-hit pivot. So this is a tough trade. You've got your perfect entry signal. You have your oscillator signal. You're coming right off support. You're tight to the 50, which is where the best trades mature. The 15 is tight to the 50. Tough trade. A lot of these bounce. Just have to be careful. Here's a first target. And this is just not a trade, short. Now here's a long, no, because the quant is red. Takes a lot to set up. So maybe 2 or 3 trades on gold. You're not going to get a lot of great trades. But again, I just want to emphasize, you can't care. You want a million good trades, you're never going to get them. You have to just cherry pick your entries, and you have to make the market come to you. The one thing I think that I need you to recognize is how few trades we saw that were losers. That's really the key. A daily chart, Richard, on, let me find it. Let me just see which market you want to look at. Be happy to do that for you. I don't know which market, Richard. You're going to have to tell me. Be more than happy to show you. I just need to do. Thank you, Robert. Can you check the NQ fast? Yes, you know what? You know why? We speeded it up, Robert, over the weekend internally. It's being beta tested. If we like it, you'll have it in a day or two. My 15 is now faster than yours. The DAX room is about a week away, 1 week from launching. So don't worry about the 15, okay? I'm only going to beta test. What I did to the 15 is we did it with code. We didn't do it with inputs. So you can't modify it. I made it just a little bit faster. Only on the NQ. It's the only market. Very, very soon, Siriam. I have Sergio working on it right now. So it's going to be this week. I know you want them. Okay, go take care, Noel. Yeah, Vicky, the hash mark is drawn by this continuation signal here. That's that multi-time frame range assessment. And that big cross is generated by the, let me find it, the revolutions signal. Everything here is buried because the code is based on looking at multiple other indicators. So you can't have an input. Those are the two. The revolutions give you the X. The continuation gives you the that flat line. And I just put it to it. I mean, you can make it any shape you want. I made it solid. If you want to make it a triangle, you can. We already have triangles, so I just configured it like that. That's all for clarity. It is an exponential cross. It is very important. It's an exponential oscillator. It's simply an oscillator formula to the second power. Any oscillator entry is a signal, is an entry. Like right here, that's a potential entry. It's a potential entry. It is key. Right here on this oscillator long, it's a potential entry. You just need the confirmation, everything else. You see, you get an oscillator signal right here on this perfect entry. If you didn't have the continuation signal, you could still take it on the oscillator entry. Now, the oscillator signal is going to give you the most false positives. It gives you great entries, but you have to make sure that everything else works. And look, see that trade there? This is on gold. If this middle quant was here, you'd have a trade. Now, I don't know how it was in real time, but that's a really nice trade. It's very hard to do, on gold, it's very hard to do a back assessment because we're having a problem with the recalibration of the dots. But the oscillator signals is really important. Remember that price on a uni-renko moves exponentially, so you need an exponential oscillator, and that's all this is. And I'll show you the indicator. It's an oscillator that has exponential movement to catch the turns on exponentially moving price. And it's just our oscillator here. That's all. No inputs. $5,210, Robert, on crude. Gold is $5,210, Asia. Right, Steve. Let me tell you, Steve, some people trade in the early morning. I don't. No, you do not, Steve. Yes, we're doing that, Deepak. We're doing that now. We're already doing that. Deepak wants the alert for the 15 cross 50, and Sergio should have it done tomorrow. He snuck out of the office on Friday without doing it, and I told him to please get it done. We can't do it, Robert. It's way, way too complex a piece of software. Do you know that it took us almost a year to make? We just can't do it, Robert. Okay, Walter, if you want a lifetime license, Robert, it's $13.99. And that's our special. That's ended yesterday, but I'll continue it today. And it includes everything. You get all the markets, it's lifetime. If we add more markets, you get them. If we upgrade, you get them. And you come into the room for 2 months. After that, you'll pay I think it's $129 or it's $129 a month, which I think is really cheap. Considering I literally kill myself. So you won't pay anything for 2 months, and you'll never give us another dime for the software, for an upgrade, for an add-on market. And I've a ton of my traders in the room will ask you questions, and they all know that when we redo the system, we don't ask them for anything. And that's just part of our philosophy. I mean, if you come aboard, we don't ask you for add-on markets. We don't ask you for money for upgrades. We just do them because our goal in the market is to make you profitable. There's a lot of teaching, full technical support, and you will never have a problem with any of that stuff. It's a lot. I mean, a lot of people will charge a lot of people aren't selling anymore. You lease for 6 months and you pay $5,000 and you never own. So we just have a different philosophy. And I really do have people who've been here for 5 years and have never paid a dime more than the software I put out 5 years ago. NDT Seriam is just there for NTA. This week, all that stuff is coming out. The trade analyzer, Shalom, I would say also a week, maybe a week and a half. That modified analyzer for the money zone trades, because it's 95% done. So it's very soon. I mean, we do so many upgrades and add-ons that most of the questions are when are the upgrades. But I tell you, I mean, Sergio's 30 years old, and since he's been here for 2.5 years, he's lost all his hair. I have a to-do list for him that's like 300 pages long. And the guy busts his case. So we're going to try to get it all out. Believe me. No, George. We're going to give you a recommended ATM, but you can modify it any way that you like. When Sergio installs, he will install any automatic trade management strategy you like and also show you how to modify it. So although we give you a recommended one, you can always change it. That is not set by us where you can't play with it. If you think you can do better, believe me, go right ahead. I have a ton of people in the trading room who make more money than I do. So no problem like that. No, EB, it's 79 for the first month. Then you're either going to have to roll to the, you're going to have to make a decision on that 79. Because at 129 a month, you don't get the software. I don't even know what to do after that 1 month is up. Because the 1 month includes the software. So it's going to get more expensive if you want the software. We've never leased the software. I don't even know what the price is. All I would think about now is that first month at 79. If you do awesome in the room and you love the software, I know whatever happens in month 2, you won't have a problem with. Believe me. I mean, we're just too reasonable a company for you to worry about that. We will do a complete configuration on you tomorrow morning and try to get you into the room for Monday morning. Stop of 11, target 1.4, target 2.7, target 2.15. Correct, Vicky. That you're trailing by 11 all the way. All the way. Okay, Michael, I'm sorry. Okay. Thank you so much, Joel. I really do. Thank you. Okay, Alan, thank you. And the trade moves to the first target. Would all other contracts move to break even? Okay. Yes, we are, David. We are. No, it's not. The Revo is not on NT8 yet, Vicky, but we're moving it. No, the auto trader is separate, Steve. At this point, it's separate. But if you own the software, it's going to be very nominal. If you don't own the software, it's going to be a cruncher. I think we're going to charge $2,000 for the auto because we're not going to release it until it trades profitably. And if it can create a positive equity curve for you without looking at it, it's worth its weight in gold. And we've been killing ourselves on it for a year. So it isn't going to come as part of the software unless you own it right now. Honestly, I'm not a hard sell guy, but I mean it like now, because we're going to sell it as a separate platform. We'll as a separate system. Because remember, you don't need the indicators to run the auto. All you need is a bare chart. The auto is housed in a server in Chicago because it's got too much programming language to put on your computer. But it will send it out, send a signal out. The reason we put it in Chicago is it will send it to the East and West Coast with equal delay. So it doesn't matter if we put it in Florida and you lived in California, your delay would be longer. So we house it in the central part of the country. It anticipates the trades. Your buy stop and sell stop should be in place before the trade hits. So it's really complex, and we've been killing ourselves on it. So if you don't own the software, it's going to be more money. And at some point very soon, we're not going to sell the software with the auto because it's been too much work for us. I mean, a year's worth of coding to Sergio. The guy's got a master's in computer science, and he's costing the company too much. Yes, Frank, change that fast to a 10. It will correlate with my fast, except for the NASDAQ that I speeded up just a touch on my chart alone as a beta testing. Swing trading, Jose, if you want to swing trade, will set you up for swing trade. If you have a couple of charts, we'll give you both the swing trading and the day trading. We can't do it across the board because it's too much work. But you saw the swing trade setups. We have the inputs. We know what you need to get the best trades. But remember, these dots and correlative markets are set to a day trading speed. So, but we have the template for swing trading. So we can give you a few overlapping markets to swing trade. 513. Thank you, Leon. I set that up wrong. 315. I'm sorry. You're right. You're right, Frank. No, Phil. We haven't abandoned FX. We just haven't. You know what? We're so overwhelmed with what we're doing that we have to go back and get it. And our FX, the ability to do FX is not going to be that hard. We have the correlative markets. The dots and quants are not going to be hard for Sergio to make. I mean, I think the Forex markets are great. And remember, we're bringing in another trader to do the European session. And that trader, I want to have the ability to do the Forex markets if he or she does want to do it. So we have not abandoned the Forex. I mean, really, tell you that sincerely. And what's his name? Dr. Keith just made literally 200 pips on one of his trades. Sure, no problem, Scott. Oh, please start over. You're so funny. Well, it's recorded. Yes, the third line, Leon, is the key line on all the charts. I did not show the DAX chart. Listen, I've been going 2 hours. I just didn't have the time. Yeah, I know. Mine's changed, Robert, because we modified it internally. I'm just going to beta test for a day or two, and then we'll send you the upgraded line if it trades better. That's all. Don't worry about the 15 on my NQ. I'll announce that tomorrow morning in the room. Okay, that's a great question, Cross. On the blue, here's what I'll tell you really quickly because I know that it's getting really late. My son's starving to death. And here's the 50. And here's the 15. Oops. And I'll show you really, really quickly. And just the opposite is true for the short trades. So on a long trade, let me change this just because I'm obsessive. I'll change this to green. And this to green. Now here's why that dark pink is the most important. It is the strongest color. And the dark green. Now here's the 15 and here's the 50. And here's price. Price is always above the 15 and the 50. It's got to be, or you don't get any background color. And it's got to be on both higher time frames. Okay, now, when you're dark green, the 50 is tilting up and green. The 15 is up and green. And the hallmark is the 15 is crossed the 50 to the upside. Perfect alignment. On the cyan color, the 50 is up, the 15 is up, but the 15 has not crossed the 50 to the upside. Now that's a big event. They're both sloping up, and you're looking for a long trade because the price is above the 50, but you haven't gotten that major event yet. And you don't know where the 15 is. It could be all the way down here, or it could be close. And then on the light blue, the 15 is crossed the 50, but then what happens is it's now turned yellow. So you have an absolute direction to trade, but your trending market has sort of petered out right here with price, where price would be right here. So your strongest is obviously this. And those are the three colors. In reverse, it's just the opposite for the short. Okay? That's done. That assessment is done on the two higher uni-renkos. So it's very powerful. I know that's the thing I was asking. I don't even know because I never even thought about it. But don't worry. If you love the software, you'll talk to me about it, EB, and we'll make you a really nice offer. And this 79 includes the software, the complete setup. And then I mean, I hate to leave it open-ended, but I didn't even think about it. But don't worry about it. Whatever we are, if you love the software, we'll make you a great offer. Don't worry, really. Yes, you can do any adjustment you want on the ATM. Thank you, Robert. It is proprietary, and our uni-renko bars we built ourselves. Uni-renko has standard uni-renko and open source has what's called shadow candles, and shadow candles are areas where the uni-renko candle will jump across areas where there's no volume at price, and it contorts the way price is traced on the chart. Our uni-renkos have eliminated that. It takes a lot of coding, but you will not get what's called a shadow area filled in by the uni-renko. So I wouldn't call it proprietary, because proprietary means it's got a patent pending and we're the only ones in the world that have it. But very, very few software systems have the kind of uni-renko candles that we have. They really do trade price true and accurately, and will not fill in an area where there's no price at volume. Thank you, Vicky. Yes, George. No, George. You can modify everything. Believe me. On the ATM, we give you a recommendation, but you can modify, and we'll help you modify it if you want to change it. Don't worry about that. We're just making suggestions. Thank you, Deepak. The moving average settings, this is 50. This is 10, even though it's a 15 period, and we may change this. So don't worry about that right now, just on the NASDAQ. No, I see it, George. You're saying, can the user adjust ATM tool trade size, targets, etc., or can only we do that? And the answer is yes, you can make the changes, George. You can do whatever you want on the ATM. It's totally up to you, ultimately. We'll send you a sign-up link. I know, it's a long webinar. My son's starving. Yeah, it is expensive. No problem. Thank you, George. That's okay, Steve. There is a difference between, actually, there is going to be no difference between the auto trader and this alert. Ultimately, this is going to be an auto trader entry, that big revolutions entry. We're going to get them on our trading chart. The only difference between the auto trader and what we do is the auto trader will look at 7 or 8 markets, and we don't have the ability to do that. So I can't find one on gold, but that's the only difference. We've never done that before, put the auto trader signal on our trading charts, but we're going to do that. The only difference is the number of charts the auto can look at the same time. And would you send more information on the DAX trading room? Steve, when I get the specifics, I'm going to send an email to everyone. But within a week or so, we're going to be opening that For us, middle of a night room. It includes the software, EB. That's correct. Or EA, yes. Aren't you like, isn't it, well, I forgot. It's that new Star Wars. That it's not CP30. It's the EB8. Okay. Hi from London. How you doing? Thank you, Robert. You missed everything, but I'll send you the replay. There's just no chance of the DAX right now because it's 8:16. It's been 2 hours and 15 minutes. If you want me to show you the DAX, just give the office a call tomorrow. I'll be more than happy to go on TeamViewer with you in the afternoon and I'll show it to you. If you want to call me at 6 or 7 at night, I'll be happy to do it for you then. I just can't keep the room open anymore. I'm sorry. Yes, it's this line. Third line down, right here is your key. You must have this line. No trades without that line. If you take it, it's a lot riskier right here. If you get this one and this one and this one, it's icing on the cake. Here's your key line on every single quant analysis. No, it moves it automatically, Wally. The protective stop is moved automatically. Everything's automated. My pleasure. Thank you, EA. Thank you, Phil. Okay, well, listen, I want to acquaint you with the platform. Is it Perlvas? I'll be more than happy to show you the DAX is an awesome market, really, but you have to trade it at 3 o'clock in the morning. I just don't have time for stocks, Jose, but the platform trades stocks just like you see. You can day trade them or swing trade them. If I had more time, I'd show you the Qs, I'd show you the SPY, I showed you all those markets. I have the data feed set up. I just didn't anticipate this going 2 hours and 15 minutes. That's the only thing. Believe me, it trades stock. These are independent forces. This money zone is going to be just as powerful on the Forex and stocks as it is on futures. Believe me. Hey, Russ. Steve, we're going to have it. We're going to have it. Sao Paulo, very nice. I love Brazil, Russ. Okay, great. No problem, Russ. Bye-bye, guys. All right, bye-bye. No problem. I'll send you the $79 link very shortly. If you want the software configuration, be in the room tomorrow. It's the only time we've ever done it. You're welcome to come. I want you to make a purchase based on performance, not on anything I say anyway, ultimately. I just hope you got some information about a better way to trade, long-term market assessment, some of our really good entries this week. And if I can't produce winning days for you and make you money in the room, and I'm giving you a whole month to make the assessment, okay? Thank you, guys. Thank you. The time for the room, EB, it starts at about 9:15 Eastern, and it goes until we make 500 bucks, until we make 500, which sometimes, honest to God, is 8 minutes. But I'm thinking if we make 500, we're going to push on. So we'll probably trade at least an hour and a half to 2 hours, at least. I want to try to rack up more profit in a trending market. But just be in the room around 20 after 9. I'm usually not in there till 28 after 9 because I don't care what happens pre-market. Pre-market is where all the small traders like us, you know, yank the market around on small volume. All that matters to me is what happens at the open and the NYSE when the big boys come in and start racking that market around. And we can get some great trades close to the open. So that's it, everyone. Have a wonderful, wonderful evening. And I just wish you all the best of luck. I'll send you the recording tomorrow. No problem. Well, we're going to send you a link tonight, EB. You call us with the you call us tomorrow morning and we'll set you up and configure you. Okay. Thank you so much, guys. Thank you. Thank you all. Have a wonderful, wonderful evening. Take care and best of luck. I pray all you guys make good money. Bye-bye all.